All right, guys, welcome back to the channel. Hope you're all having an amazing day today. Today's video, I just want to go over the market pullback. All right, so I've been anticipating this pullback. I've been letting people know as well that this pullback was gonna happen. I mean, we've been floating around all-time highs for the last couple of weeks, so this pullback is only natural. The thing here is they're gonna be a prolonged pullback. That's what we have to make sure. So since some of my accounts here are buy the dip accounts, so basically every time the market dips or pulls back, I go ahead and buy some positions for that account. All right, so two of my accounts are like that. I even bought some more from my Robinhood, but my main account that does that, so buys every pullback in the market, is basically the M1 Finance account. All right, so let me go ahead and show you guys the activity here. So I ended up buying close to $375 today. However, it only bought 374.31 so 69 cents were omitted. However, I bought into 61 positions, so what it's doing basically is averaging down my costs so that when my stock or my asset recovers to the original price, I was averaging down my cost, so I'll be closer to that price and I'll get there faster than if I were to just wait it out at the original price that I bought it at. All right, so this is just some of the activity here that's been going on. So see some dividends, some more buys here. All right, some referral bonuses. All right, more buys. Look at all these dividends, guys. They just keep on adding up. All right, remember, you'll be a long-term winner in the long run if you just wait it out, keep on averaging down your costs. So basically, like I said, the stair-step method. So you buy a stock at a low price. If it goes lower, you have some money or some cash to buy some more. So you buy into the positions, and overall, you'll be a long-term winner because once the price reaches back to where it was at, you had average down your costs. So basically, you would recover faster than if you were to just wait it out. Plus, the benefit of that is, let's say you're holding on to dividend-paying stocks. So in the meantime, you're receiving that little cash flow. In the meantime, while your asset or your stock basically recovers in price. All right, so not too shabby. All right, so the portfolio here is currently at $3,493. I had already reached the 200 plus in gains. However, since the market is pulling back significantly, my positions are down as well. So these are just some of the positions I have here. I'll go over them with you guys. The majority of these are dividend paying stocks, so you have to take into account that I'm gonna be holding on to them for long term. So I'm gonna keep on averaging down my costs on all of these. Some of them are financial, some of them are utilities, some of them are just ETFs and just regular companies that have high dividends. So basically, here's what's been going on in the account. So I was able to add two more holdings. So I was previously like at 96, but I added two more companies that have high dividend yields. So that basically has my dividend yield at 2.28. So if I were to just hold on to all the money in the account, I would be yielding a 2.28, way better than the banks, guys. The bank gives you a tenth of that, maybe. So yeah, go ahead and, if you guys like this content, go ahead and subscribe to the channel. Remember, follow me on my journey to create financial freedom. If you guys want, I'll be posting a link in the description. That way, if you guys open an account, you guys will be getting $50. I'll be getting $50. It's a win-win situation. If you guys want to do it on your own, that's fine too. It doesn't hurt me. But if you guys could help me out, that'll be great as well. That way we can keep on growing the account, and I'll provide you guys feedback and any type of information you guys need, any updates on the account, so we can see how to turn a small account into something large. One thing I forgot to mention is that I have a $9,000 in buying power still. However, that's not accounting for the money that I could use from M1 Finance, so I still have a 35% margin with them. So if the market keeps on pulling back, I'm going to keep on buying. Once I run out of my own cash, I'm going to go ahead and use the M1 Finance margin, which is basically giving me money at a discount rate and only charging me 2%, guys. But that's because I'm part of their M1 Finance account, M1 Plus Finance account. So basically, I get a little extra perks than if you were to just have a regular account. Remember, if you guys like this content, go ahead and subscribe to the channel. Follow me on my journey of creating financial freedom. And I'll go ahead and keep you guys posted on all my accounts. That way, if you guys could gain some ideas from what I'm telling you, that's great. If this helps you out in any way, go ahead and comment. If you guys have any questions, I'll go ahead and respond to you. I know you guys have been posting some comments below. I'll respond to you as soon as I can. I appreciate the help and helping me grow the channel. That way we can reach as many investors as we can, all right? Thank you. Appreciate the help. And remember, guys, be cautious. The market is at all-time highs. Usually it tends to be a 5 to 10% pullback when that happens, when it's been up there for quite a while. So this could be the start of it, or just a little minor pullback for it to continue higher, all right? Overall, we're still in the uptrend, so just be careful, all right? So be cautious. Remember, do your research on every investment that you're gonna make, because every investment involves risk. All the positions I'm in, I've researched them. I've seen their company, their financials, so kind of understand where they're at and how they operate. So I'm fairly comfortable with these companies, and I'm just gonna ride them out for the long haul. All right. Thank you, and have a great day.